Hello and welcome to the Closing Beat, everybody. Happy Thursday already. Kids back in school, right? It's Thursday. It's the day the kids go back in school. Hopefully you had a little free time on your hands here today, and the summertime is beyond us. You can quit spending money, and let's get back to getting your dough straight. We are financial advisors here at Jazz Wealth, and while other advisors are playing, got nothing, the game of life, we are playing Monopoly.
Okay.
It works? Okay.
Yeah, that's good.
Actually helped. I try to share a little story each day of something that we've done is to show kind of uniqueness out there. Today we helped a minority shareholder, and will be helping a minority shareholder in a company that's getting bought out for a lot of money. Talk about how that is going to come to them, the tax planning, the strategy, meet with their CPA, and of course one that we're going to bring in as well. Get some Goldman Sachs help in there and make sure that they keep as much money as possible instead of just blindly going, wow, that's cool. The company got bought out. I got some money. No. We'll not allow it. We're going to go to the leaderboard here, right? Let's do it. Cody, what do we got going on? Oh, on the leaderboard there.
Fresh leaderboard today. Our guy, Charlie P, in first place. Good for him, one day to go. I said, he's in first for today. And you said, well, yeah, he's in first on the last day, second to last day.
I'm cheering for Charlie, man.
You're cheering for Charlie?
Sorry, everybody else.
But yeah, we got Charlie, Claire, and 3 others there on the board. So
who's the third one?
Vailbov. I
Nope.
can't see it. I'm watching on a little screen over here.
Oh, yeah, that's an I. I've seen that name before.
Yeah, a lot of familiar names.
On the leaderboard, of course,
Yeah,
I know the name.
Names. A lot of familiar names.
Nice. Well, congratulations, Charlie P, and I hope you win, man, because Charlie P's got a certain goal in mind, and I hope he gets there. He is not a gambler. Did you see the article about Phil Mickelson?
He is a gambler.
Now, that boy can gamble.
Some of the stats they were throwing out were crazy. Like, to me, it's like he placed 40 baseball bets in a day. I'm like, that's nothing crazy. What are we talking about?
That's when you miss the cut. That's what you do.
And also, he wagered $1 billion in over a decade.
Yeah.
And he only lost 100 million. I mean, that's not like the worst, right? I mean,
well, those are big numbers, but I saw he bet 120 to win 100,000 850 times.
That's crazy.
Come on, man.
That's money.
That's good
or
stuff.
A problem.
Well, yeah. Sadly, we're not paying that much for Guess It Out, but if you do win, Charlie, I hope, wins there. If you do win, we will credit your account $100 if you're a client. Hint, Roth IRA is where you want that credit. Or if you're not a client and you're just playing along, having fun with us, we'll send you a $100 gift card, and we're going to hopefully move over to e-gift cards where you can choose the gift card that you want. We're playing with some ideas there. But for now, it is a physical gift card that comes in the mail, courtesy of Jazz Wealth here. Okay, let's talk about the markets. Inflation. Wouldn't you know it? It went up, right? Now, it went up by less than I think they were predicting. I think they had 3.3 as the number. My guesstimate yesterday was 3.18, came in at 3.2%. So it's good news. We knew it was going to go up, and now if you've been watching for a while, you know why that number went up. It's a purely mathematical thing there. Has nothing to do with inflation actually going up, although I think we would all disagree that, well, it seems like inflation is a little bit higher there. It breaks a 12-month streak. We've gone down inflation 12 months in a row. That has never happened before. The closest is 1930 when we've seen something like that. I do want to point out they like to trick you with the inflation numbers because we're talking about headline and core inflation, and then those two numbers both have the year-over-year and month-over-month number. So it gets a little confusing there. What you need to know from this report here is 92%, it's my favorite number, came from the lack of inflation or drawdown in inflation from rent prices. My goodness, that's crazy there. Rent prices are falling quickly, but they're still so high, so that's part of what's going on over there. Can I just take a second with you? You want to learn something? So what can we do as an investor, maybe investing in rental property and you see the rents out there, or someone who wants to know about this stuff? Do we think rent prices are going to go down more? And if so or not, how do we determine that? So there's a number of things we can do. And as analysts here, we like to do this one here. I'm going to say that rent prices are likely to fall quite a bit more. So think of the advice that I would give a client here. Let's jump on over to this here. So here in dark blue is the actual inflation number. It's called Consumer Price Index. That's inflation when they say that. And we break out just the rent. These are residential rents. This is not overnight rents, this is not VRBO. This is you chose to rent a house instead of buying. Here's the change. Very slow and sort of stubborn to pull back, although it is pulling back. But we can compare that to what Zillow says, because they'll give you the real and current data. So we can look forward, whereas this is only telling us what happened in July. So the Zillow rent index is almost under normal, right? Somewhere in there. So the Zillow index is falling there. We can use that data to verify. We can also go a step further and look at the vacancy rates. I kept seeing the word vacancy come up a lot today in that inflation number. I said, well, let's take a look. So the census tracks this, but that data is not it's not current. So we can actually use the apartment list number to see the vacancy rates in almost real time. And so vacancy rates are at a over 10-year high. As you can see it there on the chart there. That would seem to confirm rent prices coming down. So the sort of disinflation we're seeing in rent prices you expect to continue. And so we can use that, right? More vacancies means more available choices, means it's more competitive, means rent prices should come down. That's good news. We can take it a step further, and knowing that a lot of the inventory is in multifamily, we can look at that as well and see, is that going to further drive rental prices? These are apartments, right? The big apartments out there. So in light blue, we have the annual rate for completed units. This is what we actually use to measure. Under construction, 994,000 units there. That's incredible. That is just over like a 30-year high there, even more actually. We actually use completed units because those are on the market and are able to be looked at. I just think that's a fun number to see there. Completed units, that's a 30-year high as well. And so what does all that tell you? Right? I know we're outside the stock market here for just a second. What advice do you think an advisor would give a client that says, I'm going to buy 2 homes and I'm going to rent them out and look at the rent that I can get? The advice would be to take some off the table because that rent that you're getting today, we can now justify should be probably lower. Make sure you're still comfortable with that cash flow if you are a person who is willing to buy a rental property right now. And that's not even including the rate you're going to pay and the costs you're going to pay and everything. One last thing that we can do. Who is the largest apartment company in the U.S.? Let's see. Kevin, you know a lot. What is the largest apartment company in the U.S.? And Cody, chime in if you know the answer. They own the most amount of apartments out there. They're a public company. No clue. Cody? You're going no. Cody just shakes his head like, leave me alone. It's Avalon Bay. I doubt anyone would have known that anyways, but you know the name, right? Avalon Bay. You've seen them pop up there. Both of you say yes. Yeah, that's nice. Well, they just reported earnings. And you know how we used Hertz to determine the used car market? Well, Hertz is the largest seller of used cars coming off their inventory, so on a percentage basis. So we look at them and we say, well, if they're discounting their cars and they're selling them, that's going to hurt. That's the supply that's coming to the market. That's going to hurt them. Well, we look at Avalon Bay and we see they just reported earnings and they said our rental growth rates, in other words, rental prices, are going to get cut in half. Growth rates of 9.9%, they're saying 4, so more than half, right? So when you look at that, you go, okay, that's even further. They're the best people in the game, presumably the biggest player in the game, and if they're saying that, you've got to consider that if you're a rental person out there. A little bit of a detour from what we normally talk about, but I had to do it today. All right, S&P. There you go. Second day in a row where we had something, right, pretty much right off the 50-day moving average. We had something in terms of there being a rally. We finished the day with nothing. I'm going to say nothing, right? That was 1 point. We gained 1 point in the S&P, so that really tells you nothing. 36% of the S&P today was positive at the end of the day. That's it. At one point, we had a whole lot more going on there. What's that tell you? People are still in selling mode, right? What did we do yesterday? We went to look here. Look at. We talked about this hourly downtrend pattern. It appeared to break today, immediately erased itself. That broke. That was a failure. That was a losing trade. If anybody looked at that and said, well, obviously people looked at that, said, I'm going to take my shot. It didn't work. All those people lost money there. So that is, I'll go back over here. There you go. So that is yet another day where the sellers dominated the buyers. If you go into the our classroom in our portal there, if you're one of our clients there, you can just search candlesticks. The very first class explains what does that mean. That's one of the weakest candlesticks you can see, tends to lead to more selling. So we'll point that out in the S&P. If we go over to the NASDAQ here, moving along, so I took a little more of your time today. NASDAQ. This now actually is going to be 2 days in a row. Yesterday closed below the 50-day. First time in 100-plus days. I think it was 103 days. There's 10 other times in history where the NASDAQ closed below the 50-day moving average after an extended run of over 100 days above it. That's the blue line on the chart there. There is, I can show you. There's only one other time that it was positive over the next week. Here's your average performance. Over the next week, when the NASDAQ breaks the 50-day, people tend to want to get out, at least in the short term. Next week's performance averages a loss of about 2%. Next month's performance, still a loss, just a kind of a choppy mess you could kind of picture there. And so in the ultra short term, there's nothing that tells you this is the most opportune time in life to be in the market, okay? So that's just one data point. We're using 9 or 10 other examples. But it tells you that when a major area finds weakness, that people need a little bit, they want to think about it. They need a little bit of time to think about it. Next 3 months, okay, testing the water. The next 6 months and a year, of course, the longer you go out, the better the returns get. So the average performance after breaking the 50-day for the first time in 100 days, in other words, an extended run higher, doesn't tend to lead to massive reversals that come out of nowhere. And also ask yourself, what would be that massive reversal? What would cause it? I got nothing. Right? So something to keep in mind there. Okay, moving on. Look at the Russell today, down just a little bit. That's a nice clean pullback itself, but same thing. It had some strength today. People believe that this could be the area to be buying the pullback, and it just was not the moment for right now. So you keep looking there. I don't want to do this, but if you look at bonds, rates shooting back up again. This is getting nasty out there. So the 10-year comfortably now over 4%. A reversal in price is an increase in yield. And unfortunately, yields went back up today. Interest rates, even on the long end. Go over to the 30-year here as well. Same thing, just sort of a chaotic, catastrophic sort of decline there. It's an above average day for bonds and notes as well. I would point out, is this a normal day? Do we normally have a range of so much in bonds? Well, yeah, recently, ultra recently, but otherwise you got 1 day here, 1 day there. See how it's just ever so often? Right here, 2 days in a row, I'll give you that. Right here, right? A little bit of chop in here. In other words, we're at an inflection point. What causes price to move outside of its normal range? Indecision. Equal numbers of buyers and sellers on a multi-day basis, right? People making major decisions one way and the other side saying, you're wrong, make other decisions that way. That tug of war plays out near inflection points, and maybe something to consider there. So we'll be watching that one. That's why I keep bringing it up. All right, crude oil also pulling back today. Don't fight the trend on crude oil. Of course, you know that now. That would be very difficult and very troublesome in the short term here. Also volatility. Waking up. I'm not going to say that it's bottomed out here, but certainly waking up there, a little more volatility working itself into the market. And that's an easy one to explain because why is that? What happened over the last 3-4 days there? Volatility. Not a lot, but still the range of the day, the wiggling back and forth and being up, then down, then back up again. That's what causes volatility or people to want to participate, people to want to sort of protect in that sense. All right, let's go over to stocks in the news here. A handful of things, and I'll take your questions. Disney finally up for a day. Earnings technically beat by, quick math, maybe 5% or so. Disney Plus, Hulu Plus, ESPN Plus, all lose subscribers. That was not good. Parks and Experiences is a division that they have there. Internationally, Parks and Experiences hit a record. In the U.S., it's getting a little bit weaker there, so that was certainly helpful. That almost offset the decline in the loss of subscribers there. Nonetheless, people said, come on, it's good enough, right? The thing's been beaten down forever. Alibaba in the news there. It beat thanks to the cloud. So just like Disney has their streaming service, Parks and Experiences, you look at Alibaba, they have the cloud, they have AI. They have their e-commerce division there. Well, it beat thanks to the cloud division that they have there. Their e-commerce business, which is the largest part of their business, by the way, was pretty nasty. Revenue missed a low expectation. They missed that by 30%, but still the stock was up, so I missed something there. I spent some time watching this one here today. Capri Holdings, right? This is, do you like your Jimmy Choos? Do you like your Versace? See, I'm not familiar with these names, but Jimmy Choo, Versace, Michael Kors, and probably something else. Anyways, Capri likely getting bought out by Tapestry, the other luxury brand there. So that's why you see Tapestry down. And this is Coach and Kate Spade and, you know, something else. You can look it up. But that's what's going on there between the two of them, trying to become one. There is, if you don't follow the luxury space in terms of public markets, massive consolidation happening, whether it's physical objects that like the purses and whatever else, shoes and whatever they do, but also the alcohol brands and stuff. Huge consolidation. They're all trying to be under one roof there. All right, my favorite ticker symbol ever, Krispy Kreme. Big sell-off here today. Just stay with me for a second. Don't be immature. Second quarter earnings for Krispy Kreme. They made a profit. Think about this. They went the whole quarter just winging these donuts out the door, right? Selling as much as they could. They added all up, and at the end of the quarter, they had a profit of $223,000. That's it. Not even 1 penny per share, if you break it down that way. A fraction of a penny per share. That's horrible. I think of all the work and the effort that went into this to make 223, to come back to your shareholders and say, here you go, 223,000. That's sounding a little bit more like Uber. So anyways, that's what happened with them. What else do we have here? Tomorrow, Friday earnings, you likely won't see a whole lot after hours. I believe it's H&R Block, Allergan, and H&R Block. That's really it after hours there. In the morning, you got Cardinal Health. You have Home Depot, which will get all the attention, right? Let me just, I don't want to mess this up here. They'll get all the attention tomorrow. Yeah, that's tomorrow. Home Depot and Tencent. Yeah, so this is the right one. Cardinal Healthcare, JK Solar, Home Depot, Tencent, and that's really it, you know, as far as that goes for earnings. All right, I'll take your questions if you have any. Otherwise, we're going to get, we'll get ready for our Wine and Wealth tonight, where I'm going to be, unfortunately, a little bit of tough love tonight. So you're going to want to grab a drink so it doesn't sound so mean. We're going to talk about all the things that I see you guys doing that are ruining your dough. Right? And I'm not talking about like, oh, you have a credit card. You know, none of the basic stuff. We're going through all the thick things that I see, the geeky things, to stop you from doing some of the things that you're doing, or at least make you think about it and realize what is... what's hurting you, man? You know, keep in mind all the people that we see and we talk to, they start to see things, you know? I'm like, come on, man. We got to get this straight. So we're going to do that tonight. What else do we have here? Oh, there's one. I thought we'd get more questions on this. Too late for Penn National? If you liked it or were thinking about it at 27, 28, 29, why don't you like it at 25? Because you say it's too late, right? So you didn't like it at 25, 6, 7, 8, 9. You said, no, that's not it. It comes back to 25. Still nothing. Pretty much gave back all of the news events there. Would not be for me, though, is the short answer. I got to go to that question. One New Hope says, if Disney goes to $10,000 a share by end of the year, I'll take you to Epcot. Given that I still have, for the last year and 9 months, I started off with some, I forget what it was, but I've been selling calls against Disney this whole time and have not been called away, surprisingly. Well, some of it. I'm down to 300 shares. But so in that case, if Disney goes to 10,000 by the end of the year, I predict that I'll still have the shares for some reason. Yeah, I'll join you at Epcot. You pay for me to get in Epcot, and I will pay for the private plane to come pick you up to drop you off at Epcot, if that happens. So you have a deal. Tom's active out there. I like it. I typed Tom. I'm sorry. I was looking at the tick. Yeah, you can see it. Type the ticker symbol Tom. You sold put on SLB for a pullback. Strike price 56. I like it. Collected 140. So what's wrong with that? Now, when would you get out? Let's say it doesn't move at all. September 22nd. Okay, that's a little weird. 56. Oh, you just did that maybe, because that's I got $1.40 as the last trade today. You might have just done that. Okay, so tell me about. I don't think that's a problem either way, but are you someone that says I'm looking to make X percentage of that 140, or you have a dollar target in mind? Curious to know. I know you can't say, but since Disney didn't flush down, should we assume this is the start of an uptrend? Today went a long way to saying that. I think that's a safe thing to say there. Yep, people are now more excited about that because the value of everything that they're working on is the stock price is way underpriced for that. It has to play out, but, provided that it does. Alibaba had great earnings there. Except for e-commerce. Yeah, I'll agree with you. Everything but that. Or if you want to use the headline number and say, yeah, everything's great, man. That's fine. Little concern there with the e-commerce missing the already lowered bar. I have slight questions there. Yeah. The market doesn't care about technicals or fundamentals. FOMO, just FOMO. Yeah. Lately or prior to the start of August, we were definitely in one of those FOMO AI-driven markets, but that is changing. Asraf likes you, man. He's a big fan. Wants Cody to host a show one day, and don't let him use that camera shy excuse, man.
It'd be a great show.
It'd be a great show because it'd be like sports finance talk all day, man.
Yeah. We'd probably cover the Phil Mickelson story, bets of the day. Be lively.
It'd be awesome.
Yeah, it'd be
it
really
sounds like
enthusiastic
amazing.
and exciting.
Man. You sound very excited about it.
I get that a lot.
Yeah. So let's see. I missed some questions there. You believe market crash is coming soon? No, I don't think there'll be a market crash soon. I think the pullback is warranted, but no market crash. Michael Anthony, you've got an oddball there. So oddball looking stocks, great fundamentals. Bought today. Been doing research over the last week. 1150 under. Okay. Yeah, nothing wrong with that. Remember, fundamentals may tell you why you want to buy the stock, and it seems like you've done your research there. But you might use pullbacks like this to tell you when, right? Cheaper than where you thought you might be able to buy it. Totally fine with that. Totally fine with that. Thoughts on the J&J split there? I've gotten a couple questions on that. I would not participate in that, I can't tell you to do that. I'm sorry. I've been telling clients and looking at their total history of their lives and, of course, advising them one-on-one, but I have not found one person where that makes sense for them to participate in that at the moment versus just taking their money. So that's probably all I should say there. Trouble. Keep in mind, I should probably say, this is all for educational purposes only and should not be construed as investment advice. You should consult with a financial professional before acting on any decisions or comments made on this video. Can you tell that I've said that a couple times? I love it. That's awesome, man. All right, cool. Hey, I got to get ready for Wine and Wealth here. I've talked your brains off here today, but hopefully a little bit of insight into, I wanted to share that sort of rent price thing there because I get a lot of questions, people that want to buy rental properties and they're basing it on today's rental expectations. And that may be a bad thing to do, that may just be something you want to consider. I'm not telling you what to do, but of course, if you're a client and you want help, I'm happy to help you there. Tonight, I'm going to be a little bit grumpy, a little tough love for you. We're going to go over some things that I know you can do better, so we'll see you a little bit later. Adios.
At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar. I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.